Thanks to everyone who's joined already. We're just going to wait a few minutes before we kickstart the webinar. Good afternoon. Thank you very much for joining us. I hope that you're all keeping well, safe during this challenging period. Today is an opportunity for me to share some of the insights that we've been capturing at MAGNiTT. These are very uncertain times, but at the same time, we have learning lessons that we've had. MAGNiTT was around during the COVID pandemic, and there's a lot of learning lessons that happened then, during, after. I don't advocate being a consultant, so I'm not looking to try and give advice, but the purpose of the presentation is to create a framework for discussion and for people to consider certain areas that may or may not be impacted with regards to MENA venture capital as a result of the geopolitical uncertainty that we're currently facing. I'll be running through a couple of slides based on 3 reports that we've recently published that were done specifically for our MAGNiTT clients. And if anyone would like access, then please reach out to the team to learn more about how we can support. Within 2 weeks of the onset of the situation, we published a report with a scenario analysis on how venture capital is likely to be impacted. Following that, we identified 5 key areas in the ecosystem that are likely to be pillars of weakness that may be worth considering and discussing. And then this week, we published an M&A report. What is the likely impact of this geopolitical uncertainty on M&A? Next week, we'll be publishing our Q1 data, but I'll be coming on to discuss some of those points separately. I'll be speaking for around 20 to 25 minutes, and then I would love to open it up to the floor where people are able to share either insights and or questions that they think may be relevant for the audience to understand. I want to start by 2025. I've joined many government conversations, specifically in Dubai, and it is right to say that we entered the year from a position of strength. 2025, for all intents and purposes, was a record year of venture capital investment, and it saw a recovery post the COVID pandemic in the total number of transactions. In fact, MENA, compared to many global geographies, was one of few geographies that actually saw growth in the total number of transactions. Why do I state that? Because to understand what the likely impacts might be, it's important to understand what the drivers were to the growth of that ecosystem. Venture capital grew 74% year on year. You saw increased deal flow. Mega deals, late stage investments, risk appetite at the late stage grew 82% year on year. And we began to see investor activity shift from early stage investment towards medium to later stage capital. Having said that, non-mega deal investments also grew 72%, which show that the underlying pipeline and development of the ecosystem also saw growth and development. One key metric that I'll continue to highlight is that close to 50% of all capital came from international investors. And finally, we saw a slight recovery in M&A transactions, up 41%, but not quite the hockey stick in the exit liquidity that I've spoken about several times in the past. So key drivers across all of the different ecosystem contributed to the growth of a record year of venture capital investment in MENA. A couple of interesting things. The MENA region has always historically struggled with seasonality. In fact, last year was the only year we saw a record quarter of venture capital investment in Q3. But historically, there would be a slight dip heading through the summer period and then a pickup in the second half of the year. So there is a slight trend that we've picked up throughout the different periods of strong start to the year, slow down in Q2, potentially slow down in Q3, and then a pickup in Q4. Why is that important? Even in COVID, that we always have deal making taking place, bookended by the events that take place in the ecosystem. I wrote an article, which we can also share, what were learning lessons from the COVID pandemic. Now, this is quite clearly not the COVID pandemic. The COVID pandemic was a global shock to the ecosystem, global economy. It was a black swan event, and everyone was equally impacted, with people recovering at different stages. This is a very acute, specific to the MENA region, albeit that the contagion effect to the financial markets might be something that we need to look at, but that will be 3 to 4 months down, depending on oil prices. But there are some things that we definitely picked up. Number one, if you look at this chart over the year of 2020, it's interesting to note that the COVID pandemic being announced as a pandemic was at the same time of the onset of the war, the beginning of March. And yet when you historically go back and look at the data, and I remember this vividly when we were reporting at the time, the data in Q1 remained solid. And then in Q2, it saw a slight pickup. Why is that? Deal making in venture capital tends to historically take 6 to 9 months to come to fruition. So all deals that were being announced in Q1 are likely to have been pipeline for 6 to 9 months. For sure, anything in January and February was a result of that. And March specifically was Ramadan, Eid, and the impact of what was happening geopolitically. So on the last slide, I note that we'll be publishing the Q1 data. As you will see, and this is being finalized right now for the report, the amount was slightly higher than Q4 2025, slightly in line with what was happening, lower, but in line with what was happening at the beginning of last year. However, the deal count dropped considerably. So what you can note there is this was skewed by larger deals with a smaller number of transactions taking place. As you can see back in the COVID period, slight increase from Q4, and we anticipate, and I am aware of deals that were not announced because of the situation, because of Ramadan, that are likely, once things subside, if they subside at all in the next couple of months, be announced, contributing to the Q2 data. The reality is the data will only reflect on the impact in Q3, impacted by the seasonality, and then the recovery in Q4, because of several factors that will drive friction towards deal making that I'll come on to in a second. So effectively, the framework that we put together was pre-conflict pipeline looked extremely strong coming off the back of a strong 2025. The disruption window means that few deals are likely to be initiated, but several will likely to still be announced. Summer seasonality is potentially going to compound the impact for the region. And then finally, the funding gap becomes a lot more visible in the data in Q3 and Q4. So today's presentation is not about the data, it's to create a framework of what may be the implications when we start looking at the data so that decision makers, investors, government policy makers don't wait for the data to come out in September, but think about what are the challenges now that they can foresee heading into the next couple of months. Everyone has been looking at oil prices. I have an iPad next to me and it has been nonstop Brent crude oil. Even since the ceasefire of yesterday, prices have dropped and then peaked. This has become the indicator of the geopolitical sensitivity towards the action that's been happening in the region. Now, this naturally drives several factors in the global economy, whether it's inflation, interest rate discussions, global economy that's impacting retail and the likes. But specifically with regards to venture capital, we identified 5 key areas that we think have been impacted by this situation. Naturally, oil prices drives inflation. Higher inflation creates expectations with regards to consumption, delays in rate cuts. There's been several conversations around how the Fed is likely to react global in the US with regards to rate cuts. We had started the year with discussions around 3, if not 2 rate cuts in 2026. There is even discussions now with the Fed noting in the minutes that were published yesterday, the potential discussion for a rate hike. How does that impact valuations and operational behavior? Second, interest rates, and I've spoken at large about how the recovery post-COVID, and let's be clear, the pickup of venture capital investment in the 2 years after the COVID pandemic were driven by interest rates dropping to 0%. Therefore, the crowding out effect wasn't taking place. People were cross-asset allocating. If interest rates were to remain stable, then the availability of capital, the pressure that gets put on IRR calculations, specifically at late stage, is likely to be one of the challenges that we might need to foresee. Naturally, the international reaction in general, and more specifically, the international investor appetite for venture capital in the region. Regional instability naturally creates cause for concern, temporary repricing of risk, and slower cross-border venture investment. And I'll come on to that in more detail in a second. For a period now, at least a month, there's been limited travel, delayed ecosystem events. To the best of my knowledge, all the large events have now been pushed to September until the end of the year, which slowed down, although through COVID, we learned the ability to do virtual meetings, but it does reduce the ability for people to engage with the wider ecosystem, new investor introductions, corporate introductions, and impact deal pipeline. And then finally, just general investor risk aversion. During periods of uncertainty, and I've mentioned this several times, that uncertainty is the devil of decision-making. And as a result of that, it's natural that investors will be in a wait-and-see posture, which may lead to delays in deal-making. Waiting 1 or 2 months may lead to valuation improvements for the investor. Many investors that I've been speaking to, and I've now spoken to many of the fund of funds, government entities, and VCs, also acknowledge that they need to understand how different types of companies may be able to operate during this. In COVID, you saw that there were winners and losers, likely to have the same effect given the current situation. So natural investor risk aversion. And so when you put the 2 elements together, we identified 5 buckets in our last report that are worth kind of diving into. What is the impact on international capital? What is the likelihood that late stage funding, as opposed to early stage funding, is going to be impacted? What happens to the pipeline of deals for the next generations and years of venture investments? How is exit liquidity likely to be impacted? One of the orange, if not red flags that we've been discussing for the last 12 to 18 months prior to the situation. And what is the reliance and the impact and actions that sovereigns need to be taking to ensure continued growth of venture capital investment? So I'm going to quickly just go through these 5 points and then discuss the 3 different scenarios that we looked at. Number 1, why is international investor sentiment extremely important? In our year-end report, we highlighted that if you look at the MENA region, 50% of investors came from outside of the MENA region. Close to 23% of those were from the US, and 50% of capital came from the international investor. Now, I bucket them in 3 different categories. Number 1, we are aware of and we know of funds that have raised from the fund of funds, boots on the ground, and are almost operating like local investors. Those people are likely to be less impacted because they will understand the region better than those that are based outside, and they will weather the storm and might get further commitments from the fund of funds. There are those in the middle that have maybe made 3 or 4 and are in discussions with fund of funds to raise LP funding from the region, and they will be in continual discussion but maybe delaying their decision to move and set up into the region until there's more clarity from the current situation. And then there's those who have made one or two investments, likely at late stage, from international hubs that may be a lot more risk averse and less likely to be deploying capital into the region. And therefore, given the reliance on this international capital, what is this likely to translate into as the data progresses into the second half of the year? A couple of points specifically on this is that across the different countries and through the conversations that I've been having, it is a little bit different. The reliance on international capital in the UAE is close to 75%. Saudi Arabia, it's closer to 30%. So different geographies in the region will have a different level of reliance on the international capital. Some fund of funds potentially redirecting capital that had been allocated or committed to international investors back to the local investors to continue to support and stimulate the venture capital community in the second, if not 2027 period. I mentioned this already, but the impact on late stage capital. Naturally, during a period of uncertainty, and we definitely saw this during the COVID pandemic, raising larger rounds, 50, 100, 150 million, are likely to be impacted by the interest rate implications. Second is the availability of that capital, whether there are local funds that will be able to deploy. Third is valuation contraction in a wait and see situation, whereby at that level of funding, does it make sense to see more clarity as opposed to committing? And again, there will be winners and losers, but assuming that some companies may be challenged, what is the likelihood that they'll be able to raise capital? And interestingly, we pulled up this chart with regards to international contribution to funding versus local and regional funding. As you'll see, as you go through the funnel, at Series A on the right-hand side, 70% of all Series A investment came from investors from outside of the region, and 50% at Series B. And therefore, you compound point 1 and point 2, will there be a slowdown in later stage investment over the next 6 to 9 months until certainty is more obvious? We believe that early stage capital is less impacted. People are always looking for a 7 to 8 year horizon. People are always looking for opportunistic investments. There are several funds that MAGNiTT now tracks, including Dry Powder, a report that we'll be publishing in the next 3 to 4 weeks, of a capital availability in the region that will be looking to continue to invest specifically in those winners and sectors that may be either blind spots from the situation and or seeing growth from those companies. But I would highlight that there were a couple of learning lessons as well from the COVID pandemic. At the time, I mentioned that accelerator programs that used to operate in person were hindered by the fact that they had to go virtual. Will accelerator programs potentially continue to invest in this current period or wait for the second half of the year for programs that had been structured? Angel investors, something that is very difficult for MAGNiTT to track, but naturally the first seed or pre-seed investment coming from individuals. If you were looking at the stock market prior to yesterday, a lot of the metrics were negative year to date. Personal wealth impacts angel decision making. And therefore, the point that we're saying here is any slowdown in the pipeline leads to a tripling down effect in the months ahead. This chart specifically looking at the funnel that MAGNiTT has published in several reports of the success of companies going from early stage to Series A and then subsequent stages. This number is half the amount percentage success that you would see in Singapore, which is significantly lower than what you would see in the US. If you don't continue to feed the top of the funnel, then there are a lower number of companies that go through the funnel in terms of venture capital success. Liquidity. So M&A transactions. We just published the report. What are the areas that are most likely to be impacted? Everything that I've already mentioned for venture capital can potentially apply for those that are making acquisitions. In this case, 25% or 24% of all venture-backed exits in the region have come from an international acquirer, many of which do that to expand into the MENA region. Therefore, will this risk aversion lead to a challenge for continued M&A activity coming from external parties? Interestingly, we also looked at who are the biggest acquirers of the companies in the region. And you'll see here 58% of all acquisitions have come from startups. And therefore, given many, as we learned in COVID and likely to be happening now, are looking to cut costs and focus on their own businesses, on their own portfolios, are they going to be continuing to make acquisitions? Now, one fund of fund asked me, what was the trend for M&A activity post-COVID? And interestingly, when you start looking at the data, post-event, the winners will either have fresh capital injection and or have built up capital efficiency, where you do see a pickup of M&A activity post-event, where there is consolidation in specific segments and sectors, either because companies haven't been able to raise funds and are looking for an M&A from a sell-side perspective, and or those that have been successful are able to build up inorganic growth in other markets as a result. That will likely be an impact in 2027, but for 2026, it's likely to see an impact on the M&A activity. This chart is a little bit dated at this point, but this is part of an IPO report that we published in February. MAGNiTT is looking to create a MENA index for tech companies. Now, in the presentation that I did in January, IPOs have also seen a challenging period prior to the situation that we've seen. Only 4 out of the 12 that we tracked saw a positive return on their stock prices over a 12-month period. And therefore, the question is, will the IPO window open in 2026, or is this likely to be pushed into 2027 and beyond? We went through each of these companies, their stock performance, and we'll be tracking each of these companies moving forwards and creating a MAGNiTT index to track IPO success in the region. And finally, we talk about the concentration of capital. Many that have joined webinars in the past will have highlighted that 86% of capital and 71% of deal making came across 2 geographies. How do each of these look to react in the couple of months ahead will be key to the overall figure. Now, let me be clear. All of this is to create a framework. Somebody asked me, is it a bad situation if we see a slowdown in funding and numbers less than the year before? Absolutely. I see no challenge in that if we believe that it is likely to be impacted because of a slowdown of venture capital investment and investor behavior. However, it is important to understand that we have always looked to try and recover from the COVID pandemic. So many of the government entities like to see growth in the venture community. But at the same time, if the 2 largest countries in the region are to be impacted and likely to be impacted in very different ways, what will the overall figure look like, and where will we see growth and a slowdown in specific geographies? And most importantly, what are the fund of funds? Because I believe they're the biggest players to lobby the government for any action and or support or capital taking in terms of actions to continue to support and deploy through the local VCs or attraction of international VCs to the region. So this report is also probably outdated at this point, given how quickly things are moving. But in the second, if not third week, the third week of April, we published the report on 3 scenarios. The first was looking at an organic growth scenario. What would venture funding look like if this situation hadn't taken place? The second was if the short-term shock, several weeks, would create some temporary disruption, how would capital be delayed? And then the third, which is basically the situation that we're in, and even the conservative figures that we gave for the report are likely to be outdated, but it provides a framework. How will this impact venture for a several month situation in terms of venture capital investment? So in the organic growth, the simple metrics that we looked at using blended averages was a close to 5 to 8% growth in early stage investment, flat growth at late stage, because we saw a big pickup in investment, which is extremely lumpy in 2026, no change in international investor participation, and a 15% increase in the total number of exits, which led to close to 4.1 billion of investments and close to 370 plus deals. If we looked at the short-term shock scenario, which effectively would have been a period of 1 or 2 weeks, and that there may have been a slowdown for a couple of weeks, but then activity predominantly in the region would be taking place immediately afterwards. We predicted that early stage was likely to be less impacted, a 40% decrease in late stage investment, a 7% decrease in international investors, and a 20% drop in exits, leading to a close to 20% drop in overall venture capital investment, which wouldn't have been such a big kind of overall shock to the system. However, in the scenario that we modeled out, we anticipated that over a period of time, predominantly because any deals, as I highlighted in that COVID pandemic situation, in the first quarter of this year and likely in the second quarter of this year, are deals that have already been built up over a 6 to 9 month period, that the real impact is likely to come from H2, where the seasonality impact that I mentioned is likely to compound the slowdown. Many now forecasting that normality will come from September onwards. We'll see a drop of 5 to 10%, if not more. Again, this was done in the third week of April. A 60% drop in late stage funding because it is likely to be more impacted than early stage investment. A close to 20% decline in terms of percentage points of international investors, and a 50% drop in exits. So as you start comparing the different scenarios, we anticipate that there'll be an almost 50% decline in venture capital investments, given the lag effect and then the pickup of deal activity coming in the second half of the year, with any deals that are taking place in the next couple of months, already deals that have been through the pipeline from 2025. And that international investors will be one of the biggest slowdowns, given the three buckets that I mentioned and their likelihood to be deploying into the region. Now, that doesn't mean that there aren't things that can be done now. One, I have been advocating that this is the time to have discussions. I'm very conscious that last month was very unsettling for many people. People were waiting and anticipating how things would be developed. The ceasefire only came in yesterday. We're waiting to see the strength of that ceasefire. But it is important, if we would like to have actions, to take the actions now and not wait for September to look back retroactively. And I think that discourse, again, this is my thought or our team's thoughts and opinions on the structure and the areas that we think are challenging. However, many other people might point to further strengths. We're already seeing certain sectors beginning to see an appetite build up. Investors with dry powder are able to deploy, and maybe they're able to deploy more quickly. Maybe there is more collaboration across the fund of funds to support at a cross GCC perspective, but the discourse needs to happen now so that we can foresee some of the challenges that may come in the future. LPs, continued commitment to regional VC funds. I've spoken to almost all the fund of funds in the region. They have all mentioned that they continue to commit to the conversations that they're having. They aim to continue to invest in both local and international VC funds, and this hasn't changed their habits and behaviors heading into the next couple of months, which is extremely possible. Investors can continue to understand what the different startups are facing in terms of challenges and potentially share them with policy makers so that there are actions that can be taken from a government perspective to support some of the startups in that space. I think corporates, many companies, cash flow is king. We'll be having conversations with startups that act as potential vendors to them. Commitment to payments and reducing procurement time is essential for many companies that will be thinking about hiring freezes, potential reduction in staff. From a tech perspective, that cash flow is king in the absence of venture capital investments. And so corporates play a big role in being able to support in that cash flow process. Startups continuing to expand by region. One of the things that I've been hearing from different investors is historically they focused on GCC geographies. We're in a period where in this virtual environment, can you explore other geographies to diversify their buyer coverage and potentially explore different types of exit routes, specifically for those that are winners. And then sovereigns, as I already mentioned, kind of continuing to speak to the community, act as the liaison with the government, and work with the VCs to identify the pain points so that they can share that transparently to the wider ecosystem moving forward, so that we can continue point number one, which is a constructive conversation of discourse. How we can help, as I mentioned, we published many of these reports. We did one assessing the geopolitical friction, 1 month on, the 5 pressure points. Next week, we'll be publishing all of the Q1 data with our insights on what has changed. We'll be publishing a Saudi Arabia report with a deep dive into the kingdom, which for all intents and purposes seems to have been somewhat less impacted than some of the other GCC geographies. And we will be publishing a dry powder report, an IPO report, as well as we are now on the MAGNiTT platform, beginning to work towards DPI calculation, LPGP funding data so that people can identify LPs beyond the sovereigns that they can be targeting. And if anyone has any specific data points that they would like to have, then please do either send a request. I'll ask someone from my team to send the sales email so that we can support you. All reports that we'll be publishing in the next couple of weeks will be ensuring that they're relevant to the current situation. That allows me 30 minutes to answer any questions that you may have. So please feel free to put them in the Q&A box, and I will be more than happy to answer them one by one. Thus far, there are no questions. There's a couple of questions that are, okay, I just realized in the group chat, but do feel free to share them. I'll be more than happy to answer. What's your thoughts on long-term investor sentiment in the region? I remain extremely bullish for the long term. I think that many people who have invested in the region remain extremely bullish for the medium to long term. The region has come through several different challenges in the last couple of years and proven to be more successful coming out of them. I think that the governments are going to identify many blind spots that may have come as a result of this and ensure that they can be circumvented for the future. And so I think that it will take time to build investor confidence internationally. Those that are opportunistic in the region will continue to be bullish in the region. And let's be clear, none of the fundamentals have potentially changed from an economic perspective. The security situation has clearly put a little bit of an orange flag or red flag that people need to address. But from an economic perspective, the region has continued to evolve, and I think that they will come out stronger as a result of that. So that investor sentiment, including all of the global players that have asked many of these questions, remain committed to the region. There's a question that says, which sectors impacted more than others? Impossible to know based on the data immediately. From an economic perspective, obviously anyone that's been in tourism, anyone in retail, anyone from that perspective are likely to be more impacted, transport and logistics as well. Those that have seen benefits are likely to be companies that have diversified and look to be international. One of the things that I've been speaking to with regards to investors, people that have diversified their operations into other geographies are less likely to be impacted. And with AI being such a big theme, many of the AI companies that are looking to go global are likely to have more success than those that have heavy consolidation. Even from a geographical perspective, from what I understand, companies operating in Saudi are less impacted than some of the other GCC economies. But the reality is that the data will only show in 6 to 12 months. So if we have this conversation in September, we'll see more of that impact. Syed asked the question, assuming an agreement, how long will it take for the GCC market to recover? Does the current circumstances make Saudi a more attractive place to run a tech company? Do you expect a dramatic change in the kind of verticals? So on the verticals, I do think again, I'm not a geopolitical expert and I'm not going to claim to have answers on the impact of the wider economy perspective. From the verticals, I do think that this becomes an opportunity for certain areas, whether it's defense, whether it's cybersecurity, whether it's in logistics, whether it's in cloud services. I spoke to two fund of funds that specifically highlighted from an infrastructure perspective the challenges of AWS and the reliance on those types of solutions. So I do think from an infrastructure perspective, there will be blind spots, food security, water security, all of those type of areas become an opportunity for the next evolution in venture investment that can be supported. How long will it take for the GCC market to recover? Again, we're still in the eye of the storm. So for me, I started by saying, is this a 1 week war? Will people be returning post-COVID, post Ramadan and Eid? At the moment, there's the question about the ceasefire. For many of the government entities that I've been speaking to, normal is considered from September onwards. It's far enough for people to understand that this can still have some legs, but it's short enough that people will look to return based on summer vacations, based on education systems and the likes. The question is what happens between now and then in terms of the GCC market, and will the summer, which as I repeat has historically always been a period of summer slowdown, likely to impact conversations, M&A activity and investments over that period. But the view is that a sense of normality should look to kick in from September onwards, if not earlier, depending on this ceasefire situation. As an angel investor, I'm a member in the venture capital who invest in crypto. Also, I invest in international investment platforms. But in MENA, I do always search for startups in MENA. It's very hard to find pre-seed or seed startups. Could you advise which platform could show the newbie startups in the MENA region? I mean, well, you're speaking to one of them. We will try to track as many of the companies, specifically once they've raised venture investment. Prior to that, it's always very difficult, although we do a comprehensive job of trying to cover all incubators, accelerator programs, and the likes. Those that haven't received funding, it's very difficult to find a platform that can capture the unknown knowns that exist in the ecosystem. But if you're interested, please speak to the team and they can show you what we have available. How severe will the drop in purchasing power impact startups is also compounded by layoffs. Look, I mean, I can speak from a layoff perspective. I think that, yes, clearly that many companies are going to be putting hiring on hold. But I don't know that layoffs necessarily are naturally correlated. For all of the research and understanding for teams that are relatively small, AI actually increases efficiency. I've been advocating this across the whole of the MAGNiTT team. I continue to push them for all intents and purposes to be using tools. And in the end, the productivity increases as opposed to having to have layoffs. Now, each company, each industry, each stage will have different implications. I do think that purchasing power is clearly going to be key. But I go back to the point that I said, honoring contracts will be the biggest differentiator. Startups always remember which vendors continue to pay them during difficult times and those that stalled, delayed payments. That creates a massive challenge for cash flow projections. And I think that's one of the bigger challenges as opposed to purchasing power. Does your firm consult startups who are seeking to seed funding from the region? We do not consult on the startup side. The data on the platform does identify newly raised funds, dry powder availability. We're going to have metrics for DPI and success of VCs in the region in the coming months on how good they are. We have exit criteria, including we're now looking to try and capture secondaries, but we don't actively consult startups. We do advise governments, corporates, investors with specific theses that are looking to deep dive into segments, sectors, pain points. So if anyone's looking for something specific that can be supported through data, we're happy to advise and support from that perspective. What patterns, trends are you seeing for international organizations that do business in MENA by collaborating and working towards government contract and partners? I mean, for now, every government entity that I've spoken to has said that they want to operate business as usual. Nothing has potentially changed. The FT came out with an article today saying many of those international organizations that have set up have CEOs returning back to the region, some still in a wait and pause situation. I think governments continue to support. I think the government budgets is an interesting question. One, we had already entered a period where governments were cutting budgets in certain areas. The question now will be whether the already existing budgets will be pushed towards areas of defense, economy, etc., and how that will translate, which is why I continue to advocate that the fund of funds and the VCs have a role to highlight the challenges in venture. I can't speak enough that so much has been done to build the venture capital community in the region. The success has literally been in the last 2 to 3 years, the strength at which it has outperformed many global ecosystems. And that needs to be doubled down to in a period of uncertainty so that we come out stronger as a result of that. What will the rate of failure look like? I mean, great question. You saw the funnel chart that I did. We have a full funnel analysis of rate of success, rate of failure. I think it will be based on vintages. Naturally, in COVID, you also saw some companies are winners that will continue to have founders that can succeed, some likely to do less well. The success of the company will be based on the founder's ability to pivot during these challenging times. But it is almost natural that up until March 1st, many of these companies had projections, plans, hirings that have now, based on each of the different sectors or industries that they may be in, completely different. And therefore, they have to scenario test and take the appropriate actions to be able to come out stronger. Rami is asking for the contact person. I will send that here so you have it. How will the war impact startups elsewhere, given how active regional investors have been on the global stage? I mean, look, again, I'm not trying to be a Debbie Downer. I think one of the biggest challenges is not even the investors here investing internationally. We had already started the year with questions around private credit, credit defaults, the impact on different economies. I think the wider question, which is why the stock markets are so forward-looking and looking for good news, are driven by the impact on oil price to inflation that is likely to impact interest rates in the US, availability of capital in the US, and then the contagion effect of what that has on credit spreads, on availability of capital and the likes. I think that's the bigger question with regards to investors globally. Investors locally, I haven't spoken to them specifically about their investment behavior internationally, but I think it's the wider financial situation that may impact global startups, which is why they're looking for an off-ramp and for oil prices to come down so that they reduce the challenge with regards to inflation and the wider economy. Will the back and forth unclear nature of the ceasefire impact the role of investor confidence? Again, I'm not a geopolitical expert, but it can hardly help from that perspective. As I mentioned, uncertainty is the devil of decision-making. If you look at the stock market just yesterday, based on the news of the ceasefire, the reaction was like visceral. I mean, the fact that it went so quickly into positive territory shows you how much capital was waiting on the sides to jump in. And yet today, you've already seen a slight slowdown. Something that I've just picked up with time is that public markets are very quick reactors to not only the now and then, but also forward-looking to the opportunities. Private capital always tends to be slower, more delayed, and more cautious. And so the uncertainty of the current ceasefire will only prolong uncertainty in terms of investor confidence. And I look at it from an operating perspective. Clearly, some people have stayed in the UAE or other geographies in the GCC. Some have left for Eid. Some are still deciding when they come back. It's that type of uncertainty that will create a little bit of a lack of, not necessarily confidence, but slowdown in decision making. Where there begins to have a clear path to certainty, you'll begin to see that investor confidence continue to grow. Could investments in non-GCC economies become more attractive? Absolutely. I mean, from any perspective, investors will continue to look at opportunities outside of the GCC. However, it is a little bit of a chicken and egg. Where is the capital coming from? A lot of the success of the region has been driven by the capital that has been made available by fund of funds with mandates for investments in particular geographies. We know that there are funds in funds at Jordan, Egypt, other jurisdictions. Can they become more attractive? potentially, but that will also be driven by the availability of capital in those geographies. Can we compare potential VC PE impact on the region relative to other markets outside the region? I mean, we can, but not yet. I think that the data really only will come to fruition in the months ahead. If we were to just look at the data for Q1, I don't think that it's a correct representation to date. We always compare ourselves to what's available from international benchmarks. MAGNiTT, and I repeat, kind of covers Africa, the Middle East, and Southeast Asia. It'll be very interesting to see how Southeast Asia's venture investment compares to the GCC, but we also know that there were already challenges with regards to liquidity and availability of capital in Southeast Asia. So it's difficult to be able to compare apples and oranges, but we will look at the investment activity globally and the impact on the region. What can founders, VCs, and LPs do? I mean, ultimately, founders have to scenario test. They have to anticipate now the likelihood that investment will slow down over the summer unless they're in direct conversations. Depending on their company, they need to kind of scenario test the availability of capital that comes from contracting. I go back to the point that honoring contracts is probably the biggest supporter of the venture capital, the startup community right now, and supporting deal making and reducing frictions that come from procurement are definitely things that can support founders. VCs, look, I'm one person speaking to several people. VCs have all of their portfolios, each of which are in different sectors, segments, and jurisdictions. Each one will have different pain points. They are able, through things like the VC Majlis and other forums, share some of the pain points to create visibility. I go back to the action slide that I add. I felt that there's been a lot of silence in the venture community over the last 3 to 4 months, trying to absorb what's happening. Now, if you want to take action, is to share those thoughts, ideas in a manner that can be constructive to come up with solutions. And LPs, specifically the fund of funds, can then aggregate for each of the geographies that they are LPs in, the feedback that can come from VCs. So it's almost a rainbow effect, or sorry, a triangle effect, whereby the founders at the bottom are able to kind of take actions to mitigate risk by scenario testing. VCs can better support them by understanding their needs and requirements, whether it's for capital and or frictions that they can share with governments, and LPs can aggregate the feedback that comes from the VCs to be able to support them. We'll be sharing a post-webinar summary where you can get the recording. It'll be available on YouTube. There's no cost for any startup being added to MAGNiTT. If you can please share the data at MAGNiTT email address where we can support adding that as a profile. What are your thoughts on what kind of investment directive the government will give local investors to not sit on cash, but keep investing new and homegrown startups? I mean, the role of the government is to continue to support the local ecosystem, and they want to incentivize, or they will look to try and incentivize them to be able to do so. We have seen investors with dry powder continue conversations, continue engagement. DFHQ in the UAE has continued to host programs and in-person events where they continue to engage with different entities. Similarly, I was speaking to Hub 71 in Abu Dhabi. They continue to operate in person. But in the end, it's the investor that needs to make the decision on the viability of the startup. There's another question on sectors. Again, the data won't be able to show that now. We'll be able to look at that in a couple of weeks or months, I would say, to be able to have credible data around any shifts in specific sectors. What initiatives are governments assessing to increase investor confidence? It's a great question, and it's not something that I have had an answer to. It goes back to the question, are any government initiatives that I have seen to date have been focused on SMEs at large? Recently, there was an announcement in the UAE with regards to travel and tourism, but venture-backed tech companies, I have seen Dubai South, for instance, put out an announcement for deferrals of rent and licensing payments. I would welcome and encourage that across different jurisdictions, specifically for companies that are working fully remotely. But I think that there are many governments trying to assess issues of defense, food security, and financial services. And hence, it's the requirement, or at least the encouragement, of the LPs and the VCs to be able to at least share the pain points to see if there are specific initiatives that can support companies at this point. Given that the worst has already happened, will it accelerate local investment into MENA startups in the long term, or is it business as usual? I mean, I think that there is continued confidence in the medium to long term. So I don't believe that from a medium to long term perspective, things change. Fundamentally, the economies have been very strong. They've continued to grow from a GDP perspective and an economic development perspective. The question is how they rebuild the investor confidence and the community to engage over the summer period so that we see that normality kick in from September onwards. What are my perspectives of startups investing in Africa? Nothing specific right now, each depending on the sector, geography, and industry in which they're operating. I realized that there are some questions in the group chat. Verticals, I think I've addressed. Directives, founders raising. If you were raising a new fund for making early to mid stage, I'm curious, for example, would you source funds from, where would you source funds from? It's a great question. I mean, I'm not one that's raised funds. I repeat, all the conversations I have had from the fund of funds, they have committed to invest and have the budgets allocated to invest. I think that MENA family offices are encouraged to invest in venture. I'm aware of at least 3 family offices that are setting up venture funds for either direct or LP investments. Angels, I think, will be challenging given the volatility in the stock market and personal wealth's impact on their behavior is likely to be challenged. Can you speak to what kind of MENA native travel startups you're seeing launching? Not specifically. I cannot speak to that right now. How can VCs and ecosystem players help startups deal with poor consumer sentiment and fearful, anxious talent? I mean, honestly, the only thing I can say is be completely transparent. One needs to continue to communicate transparently with all stakeholders. I've seen some great startups sharing initiatives that they're doing on LinkedIn, communicating quite publicly about some of the things that they're doing with their employees and with their clients, building up all of that public capital and brand awareness during challenging times will not only support you now, but coming out of the current situation will continue to support, even from a talent perspective. Even if you have to take challenging actions, which no doubt many companies will be looking at, how you communicate, how you deal with it from a personable and empathetic perspective, the flexibility that you provide your employees during this challenging time will be remembered not only in the short term, but the medium to long term. So I think that constant communication and having not only highlighting the problems, but the solutions and the next steps are ways to communicate with consumers and talent. Right. Thank you very much to everyone. The team has shared a whole bunch of links. If you have specific questions, asks, data points, or would like to access the reports, please reach out to our team. Who'll be happy to share you. We have 1 or 2 initiatives now with people that are looking for access to the research. So we'll be happy to explore them with you. If you have any questions for me, please don't hesitate to reach out to me on LinkedIn. I'll be happy to connect with you. I'm sharing constant updates through Instagram and on LinkedIn of thoughts and insights that we have. So I will just potentially, Farah, if you can please share both my LinkedIn and Instagram. And if there's anything that we can support, we will do, but we aim to continue to communicate and answer some of the questions that we've just shared through this discussion. And I wish you safe and hope to see you soon at either an event or in the UAE. Thank you very much.